Good morning. Welcome to IG's Early Morning Call. It's the last day of August, Thursday 31st. Let's take a look at what we've got in terms of some of the news headlines driving the markets today. I want to begin, first of all, in the Asia-Pacific region. Seng down today after we got another set of contraction data coming through from PMI numbers in China. Meanwhile, activity in factories across China shrinking for a fifth month in a row. So a lot of data coming out to continue this idea that China is in slowdown mode. Meanwhile, we've got the US dollar holding the recent losses, the retracement that was underway as of the last couple of days. We're awaiting more jobs data. We've got the weekly data today, and of course the big non-farm payroll number out tomorrow, expecting 170,000 jobs to have been created, which follows the 177,000 that we saw yesterday from the private payrolls at ADP. And today we've seen the biggest ever quarterly profit recorded by any bank around the world. It's gone to UBS. It's integrating the old Credit Suisse business, and it's as a result of the mechanicals around the absorption of business that's driven that big quarterly number. Take a look at what's happening with volatility. I'm tempted to say we're on the way down still. We are absolutely, as of the low point today, at just breaking yesterday's low. Although there is a little bit of interest in buying. MACD pointing down. I think it's possibly more likely that we'll end up seeing a retracement all the way down to the 1510 level. Although that being said, we're now at, I think, a fairly interesting sort of fib area of support, I'd have thought. In fact, we're now down below the 76.4%. So technically, if you look at this as an opportunity to continue to drive this down, that would be your price target down here at 1507 if you're short on this with the stop above the top of yesterday's candle. But in fact, what's happening at the moment is that we do have money going into the European equity markets. In fact, if I draw you a 30-minute candle chart here, you can see the vertical dotted line where we closed out yesterday's cash session. This is what happened subsequent to that. In the last hour or so, we've got a little bit of interest buying again. We're 12 points below the 7,500 level for the FTSE 100 at the moment on this chart. And as I say, we're looking for a slightly stronger beginning to the trading day today. So like we've seen pretty much so far the last week or so in the markets, we've got interest in buying still at these levels. Same sort of thing on the German markets. After yesterday's down day, a little bit of interest in buying this market. Currently trading at 15,925. So I think the FTSE is slightly better off than we've got some of the other continental markets after that drop. Likewise on the French markets we saw yesterday, buying interest, but by a smaller margin than we saw the drop on yesterday. That's where things are at the beginning of today's session. The FTSE seems to be crowning out on the upside as the best performer there at the moment, going into the top of the hour where we see trade get underway in the European session. Overnight in Asia, it's been an interesting day for what's been happening across the Chinese and the Hong Kong markets. An outstanding performance because it's on the way down. Outside of this, we've got pretty good results coming through. Nikkei up almost 0.9%. Part of that is to do with what's happening on the foreign exchange markets, which I'll take a look at in just a minute, where we've got a 15-year high for the euro against the Japanese yen. S&P ASX 200, it's only a small gain on the session today, but nonetheless ending out with a rise. That drop on the Hang Seng Stock Index, I'll cover this in more detail in just a moment. It's broadly speaking because of still contraction in the manufacturing sector as a result of that PMI data coming through in China. Let me take a look at what's happening in the US markets. As of yesterday's close, the Wall Street markets across the board were showing gains. And once again, it was the technology index, the NASDAQ, that outperformed on the upside. And I'll look at this on the 24-hour markets. Not much move, but the market's not closing too far away from the top of the candle on the 24-hour markets in yesterday's session. This is a little bit more interesting for me, I think, in some respects, because of that big gain that we saw on Tuesday, holding that yesterday plus. And at 45.17, we're trading not too far away, pretty much from levels not seen since the beginning of August. So here we are now on the final trading day of August, looking as though potentially, certainly if we see another positive day, that we'll get all the early part of the month negative offset by this recent rise that we've seen over the last week or two on the S&P 500. Waiting the opening of today's trade, obviously later on today, we get the weekly jobless claims out before then, and also the PCE indicator, which many are suggesting now could suggest that the Fed might actually possibly now be on hold when it next meets to discuss interest rates with that Wednesday decision on September 30th. We'll have to see how all that unfolds a little bit later on. My colleague Angela Barnes will be with you at 1:30 on the IG platform to take you through the release of that data at 1:30 p.m. UK time today. So the euro yen has hit a new 15-year high in the last 18 hours or so, a combination of still hawkish European Central Bank activity and a still dovish Bank of Japan. Let's take a look at what we've got today in terms of some of the economic data. Industrial production contracted 2% in Japan in July, month on month, affected by weakening overseas demand and China's economic slump. But the consumer isn't too badly affected. Retail sales rising 6.8% in July from this time last year, beating the market forecast for 5.4% gain and marking a 17th month of increase. Now, where this can best be seen, I think, is on this euro-yen trade, where we've seen that market pop up yesterday above the previous high. If you look at the chart here, 159.50 was where we were at the previous high. And yesterday we went to 159.76, a new 15-year high for the euro yen. Diverging comments from Bank of Japan board members suggesting there is clearly no consensus on how soon the Bank of Japan can scale back its massive monetary stimulus. One of them, Naoki Tamura, said yesterday that Japan's inflation was clearly in sight of the central bank's target. But this morning, another board member, Toyoki Nakamura, warned that it would be premature to tighten monetary policy. Recent increases in inflation were mostly driven by higher import costs rather than wage gains, he said, and tightening before rising prices accompanied by higher wages would hit domestic demand and corporate profits. The big cross, of course, is what's happening with the dollar yen. And we're not too far away from the highs that we've seen recently, which went into that area of the market where previously we had seen the Japanese authorities enter to try and strengthen the Japanese yen, I should say. This is the US dollar rising against that weaker Japanese yen in the last few days. We've seen the highs not seen since the 4th of November, so not trading too far away from that. But the big move is on the euro yen. China's manufacturing sector contracted for a 5th straight month in August. This is the data that we've seen come through today. The official NBS manufacturing PMI in China rising to 49.7 from 49.3 in July. The reading was above a forecast of 49.4, but anything below 50 still indicates a contraction. On the brighter side, new orders reverted to expansion for the first time in 5 months. Factory owners indicated that producer prices were improving for the first time in 7 months. A quick snapshot of where we are on the Chinese yuan. This is the US dollar trading against the Chinese yuan. It's been flatlining recently, currently trading at 72.978. Some economists believe that an uptick in growth activity is still on the cards in China in the third quarter, particularly if incoming stimulus starts feeding through to the economy. But a lot of questions have been asked as to whether or not the stimulus is correctly directed and whether it's in the right area of the economy across China. And don't forget, recently we've seen China indicate that it will no longer indicate what its youth unemployment is, meaning that potentially it continues to rise. And that is obviously a big worry internally for the Chinese authorities. Non-manufacturing PMI fell to 51 from July's 51.5. So that is still expanding, led by the continuing fall in services activity. But we continue to monitor this dollar against the Chinese yuan. Now, let's get back to take a look at what's happening across the European markets. We've seen some German retail sales numbers just come through. Retail sales missed expectations, a negative 2.2%. We were looking for a drop of 1%. So it is a bigger than expected drop coming through. We know that the German economy is experiencing all sorts of problems. A bit later on this morning, the unemployment rate's forecast to rise to 5.7% in August from 5.6% in July. Now, consumer prices across the Eurozone are also expected later on today. I want to show you what is likely to happen there, according to economists. The CPI in the Eurozone is forecast to decelerate for a 4th consecutive month. Headline CPI is expected at 5.1% in August, year on year, down from 5.3% in July, a level not seen since January 2022. Remember, yesterday we saw the German CPI number coming in still at elevated levels. I want to show you the trade around the euro dollar. As we see a little bit of money going into the US dollar, we've got the euro down a touch today. We've been capped out by this blue line, which is the 100-period moving average, currently trading at 109.14. If you consider this is a trade that we've seen over the last 4 or 5 days to continue to rise, in other words, this is just a small retracement, your stop would be under yesterday's low point in the candle, and your price target at the first call would be 110, which would be over the 50-period moving average and the highest we've seen since the 11th of August. We'll have to see how things develop today with the release of that economic data around US PCE and the weekly jobless claims. In fact, let's take a look at that, the economic data out in the States. It comes at 1:30, and as I said, my colleague Angela Barnes will be covering this. Personal income and spending, core PCE prices, and initial jobless claims. Jobs data is one of the market's main focuses this week. After the fall in JOLTs job openings on Tuesday, that's the number of jobs out in the market, the ADP service yesterday showed that employment in the private sector has softened in August. 177,000 jobs were created in the month. That's nearly 200,000 fewer than in July. Now, that was an outlier on the upside, it has to be said. Tomorrow, August non-farm payrolls, Economists seeing 170,000 job creations, and the unemployment rate forecast to stay at 3.5%. Let's just quickly wind back and take a look at what this means on these markets and go back to the euro dollar, because I wanted to focus in on this on the basis that expectations are there is the potential for downside risk for the US dollar as a result of all this, especially if we do get some softening in this jobs data, which was very much the focus of attention for Jerome Powell last week at the Jackson Hole Symposium. Just going back to this Dixie trade here, we are being held up by the 200-period moving average, but look at the MACD yesterday, accelerating on the downside with a clear drop now below the signal line, the MACD line registering 39,586. So that is now pointing down. Does that give us further impetus to see further declines for the dollar on this? Certainly, if we see some weakness coming through in that data, which means that whilst the Fed might need to keep rates high for longer, that situation is beginning to diminish potentially if we do see weaker data coming through in the next day or so. So that is, I think, what the dollar is setting us up for, is the potential for further risk on the downside for this economic data today. Now, one of the stocks I want to be watching at 8 o'clock this morning at the top of the hour will be UBS. It has come in with an absolute stonker this morning in terms of numbers. It's taken a new all-time record in the banking sector, the Swiss banking giant UBS posting the biggest ever quarterly profit for any global bank in the second quarter. But it all comes as a result of its emergency takeover of Credit Suisse. So it's a little bit because of the mechanicals behind that. Let's take a look at the numbers. The second quarter group net profit attributable to shareholders was $28.875 billion, which is what it reports in, against analyst estimates of $33.45 billion. So it was a disappointment, but the sheer size of the quarterly profit was as a direct result of the accounting difference between the $3 billion price tag UBS paid for Credit Suisse and the value of the acquired lender's balance sheet. In reality, there was a second quarter group negative goodwill of a whopping $28.9 billion. Now, third quarter forecasts are for around break even. Bloomberg is reporting that UBS now commands roughly $5 trillion in client assets, giving a shot at global primacy in the business of managing the wealthy. UBS confirmed that it would fully integrate the local business of Credit Suisse by next year and seeks $10 billion in cost cuts at some point over the next year or so. I want to show you the share price chart of UBS, which I've got here. You can see in the last few days, it's risen again. I want to show you the longer term chart on this just to give you some context about what's happening. And I want to show you that line up there, which is the price target, which is the highest we saw on the 10th of August 2015. And we're not too far away from that. That certainly, I think, is aspirational goal for those that are in the money here at the moment on UBS. But as I said, the number at 28.8 billion, I've got to blink and look again to check I've got the numbers right, for the quarterly figure. did fall short of expectations of 33.45 billion. So at that level, at least, it is an interesting number, but it did fall short of expectations. I liken the acquisition of Credit Suisse is like one of those snakes that opens up to eat a large mammal, and you see the jaw unlock, and the snake takes a couple of days to swallow. And I think that's really what's happening here at UBS. It has done the Swiss authorities a service in taking on the beleaguered Credit Suisse. UBS is going to find it interesting over the next few quarters as to how it delivers its synergies and how it wants to work out how best to integrate the business. But certainly it seems to want to obliterate the Credit Suisse name and all taken in to UBS. So it's a question of now as to, I think, it's how long it's going to be before it breaks that high that we saw multi-years ago, 22.54. Another stock to watch out for this morning is this. It's Pernod Ricard, the French spirits company. This is a downward-facing wedge, which is called a bullish wedge because it normally resolves on the upside. And I quite like the numbers coming through this morning. The Mumm Champagne and Absolut Vodka owner posting a higher than expected operating profit for the fiscal year 2022-2023, up 11% to reach 3.35 billion euros. Looking good. Sales reaching 12.13 billion. An organic rise of 10%, with sales in the fourth quarter alone rising 19%. Ricard proposes a dividend up 14% on last year. I quite like the look, shape and feel of these numbers from Pernod Ricard. The stock will open at 194.72. If you're long on this, stock goes underneath the 1900 level, which will take you below this line of support down here. As I said, normally you get a resolution on the upside on a downward facing wedge like that. Let me just quickly draw you a line there, see if I can. It doesn't seem to want to work. Let me just draw a line using that tool if I can, and then copy that and get you an idea as to potentially where the breakout, as and when it comes, that could take us up to 2100 or 210 euros per share, which would be the high point we've not seen since the 30th of May earlier this year. So that potentially is the way in which this downward-facing wedge might resolve itself. To get to that point, we've got to go past the 200 period moving average and also break this falling line of resistance. But as I said, look at the numbers out this morning. Looking pretty good for Pernod Ricard. Over in the US today, so far as corporate numbers are concerned, just a few companies to look at. Broadcom, Dell Technologies, Dollar General coming through this morning. Dell after the bell tonight. Broadcom, I think, also reports after the closing bell this evening. None of those trades or sessions on the IG platform. Oil prices, a little change this morning. Let's take a look back at what happened yesterday for EIA inventories, showing a substantial drop in crude oil stocks last week, confirming the number we saw out from the API data. Domestic production remaining unchanged at 12.8 million barrels of oil per day, at the highest since March 2020, but strong exports and sustained demand from refineries meant that crude oil inventories fell 10.6 million barrels last week. And this is always a good reason to buy the price of oil. And indeed, that's exactly what happened. Yesterday, we saw another rise, albeit a relatively small one compared to what we saw on Tuesday after the API release, but nonetheless trading at 81.47, not too far away from two-week highs. Is this now on the way to 84.40? That would be meeting the highs that we saw back on the 10th of August. If you're long at 81.48, stop goes below the 80 level with a price target at 84.40. Staying on the charts, just wanted to leave you with what's happening on spot gold. Holding on to the recent gains at the moment, trading at 19.43. Nothing to bite on there today. We'll have to see how things develop. If we do get a further weakness for the US dollar, if we do see further weakness for economic data coming out of the States the next couple of days, I think the dollar lower trade will be the one to follow. Gold, as a result, will be the one to watch on the upside. And as I said, Angela will be back at 1:30 today with Beat the Street. Hope you can join her there for that. We'll be releasing that economic data out in the States later on. And that might give us a further hint as to where things might end up in the week when we look forward to non-farm payrolls tomorrow. In the meantime, look ahead to that number out today from UBS at the top of the hour, along with Pernod Ricard. Two stocks to watch at the start of today's European session.